5 years ago entirely on the stock market. The stock market is one very, very highly underestimated vehicle for retirement. And what shocks me is that I meet people in their 50s who don't have a single investment in the stock market or in the financial market for that matter. There are different kinds of market, but the one that many of us know is the labor market, the 9 to 5 that some of us have participated in the past 10 years, 20 years, 30 years, now that we're in our 50s. And the labor market has a problem. The major problem with the labor market is that you must trade your time for money and you must trade your energy for money. When you are no longer there, you can't make money. But the amazing thing about the financial market, of which the stock market is one, is that the stock market allows you to make money even while you sleep. The stock market offers you the vehicle to safely make passive income while you sleep. And that gentleman retired. He's in his mid-40s. He retired 5 years ago because he started investing in the stock market 20-something years now. He does not need to work. He doesn't need to do anything, in his 40s. Retired, very wealthy. Now, I am very excited that there is renewed interest in the stock market, and then people are asking all kinds of questions. There are many beginners in the stock market. They're asking questions. What should I invest in? How can I begin to invest in the stock market? I'm a newbie. If I am new, what should I invest in? How should I invest? And I hear those questions. I receive those questions all the time. So it looks to me like globally, there's renewed interest in the potentials of the stock market. And the other day, somebody asked me, is it safe? Because I'm in my 50s. Is it safe to put my money in the stock market? And my answer is yes. The stock market has been there for over 400 years. I think the very first stock market in the world started in Netherlands. And then from there, stock markets have been there all over the world. And then one of the things that should help you to sleep well, if you invest in the stock market, is that it is very, very highly regulated. You just can't do anything in the stock market and get away with it. It's very, very highly regulated. And this is also why, if you must play in the stock market, you must use a licensed broker, or you use an app that is tied to a licensed broker, a fintech app. So, but as in everything, there are fundamentals, there are laws governing everything. Everything in life, every experience has laws governing them. If you want to have a healthy marriage, there are laws governing healthy marriage. Something like mutual respect, something like being very deliberate about the words you use for one another. Something about not being led by your mood, but being led by the covenant of the agreement that you have with your spouse. In money, there are laws. And the most basic one that many of us know is the law of sowing and reaping. And this is also where the investing is covered. Because if you don't invest today, you will have nothing to reap tomorrow. Just think about a farmer who harvests maize and then eats up all the maize and leaves nothing for planting. So in the next planting season, there will be nothing to plant. And when it is harvesting, there will be nothing to harvest. So everything in life has laws and has fundamentals. And usually the fundamentals are never really more than 3 or 5 or 7. So by the time it starts becoming 17 fundamentals, it's no longer fundamentals. So today I want to tell you about the 5 rules, the 5 laws of the stock market. If you follow these rules, you will not make the kind of mistakes that many of us made, like when I started. It will save you a lot of losses. I didn't I didn't obey this law. In fact, I learned these laws I'm going to share with you the very hard way when I started investing in the stock market in 2003, late 2003. I got my fingers burnt. Because one thing you have to understand is that the money is not in the market per se. The money is in your mind. The money actually, there's a lot of money to be made in the stock market. There's a lot of money to be made in Forex and crypto. There's a lot of money to be made in starting a business. But it is the wisdom in your head, in your mind. It is the financial literacy that gives you access to that money. So you might be sitting on a lot of money in your industry or around you. You might be sitting on a lot of money as a professional. But if you don't have the financial literacy, you will not have access to that money. It happened to me, when I started working for Shell in the 1990s in Port Harcourt, in Rivers State. I made lots of money. And I remember in Port Harcourt, for some of you around that who live around that area or who remember, who are old enough, there was a time in the 90s that you could buy land in Port Harcourt for 20,000 naira, for 25, for 30,000 naira. And guess what? I had the money. I could have actually have bought like 50 plots like that at 20,000, at 30,000. And most of those places in Port Harcourt today, as of 2025, you can't buy them for 20 million, 30 million. So you could imagine, the money was there in real estate, but because I didn't have financial literacy, I didn't have access to it. And then I've established that everything has fundamentals. Real estate has fundamentals. And so to succeed in anything, in any investment vehicle or any venture, you will do yourself the favor to first of all learn the laws governing that vehicle. Learn the rules governing it. If you want to drive, there are laws, traffic laws. Because if there are no laws, you just get into your car, people just get into their cars, and then there'll be a lot of chaos in the road. It's the same thing with the stock market. So let's go right into it. Because if you don't know the rules, you will lose money. So I have called them 5 sacred rules of the stock market that you must follow or risk losing everything like I have done. Okay, so most people don't lose money in the stock market because the market is bad. They lose money because they break these sacred laws. So rule number 1, never invest without a system. Please, somebody type it. Type it in the comment section. Rule number 1, the law of the stock market. Number 1, never invest without a system. And then you see, a system will include your goal. There's an investment goal. Sometimes your investment goal might be long term. Like you might say, I want to retire in the next 5 years. So that becomes part of your system. And when you define the system, you will no longer be asking every time, what should I invest in? What stock should I buy? Because the system will automatically make the money for you. Like I have a system. I have a dual system in my stock market investing. So I call it a dual system. I think I can still call it something. Sharper. But what I have done is I have 4 licensed stockbrokers, 4 or 5, but I'm not too active. I have a couple of stocks with them, but there are 2 in particular that I'm most active in. And my system is invest for retirement in one. So in with one of the stockbrokers, I buy stocks that I'm not going to sell. I buy stocks that I'm going to hold for a long term, stocks that will follow me into retirement, and they're dividend stocks. So I buy that all the time. If I have a little money, if it's $1 I have today or $5, I buy. I don't wait until I have big money. So it's a system. The other stock, I have another stockbroker, and I focus on penny stocks. And my penny stocks are medium term, a medium term being, 2, 3, 5 years, while I watch the fundamentals. So I hold for 3 years. And then sometimes you have these penny stocks that do amazing things. You might buy it for 3 naira, or you might buy it like in the United States, in the US stocks, you might buy it for $8. $8, and then within a very short time, like somebody was actually telling a story recently. He bought some stocks in the US, $8, and then these stocks have risen to 80 something dollars within a short time. So I have a strategy for penny stocks. And the interesting thing is that I use in my system, I use the penny stocks to continue to fund the long-term stocks. Are you getting value? Is this making sense to you? So the law number 1, never invest without a system. You should have a system, and then you should have a written plan. You should have entry rule. You should have exit rule. You should have risk management rule. All that forms part of your system, because the market doesn't reward your emotions. It rewards your discipline. And you really have to understand this about the stock market. If you don't have a system, then your emotions are going to ruin you. Because you can buy a stock today, and I see it happen every day with people. Okay, like there are some stocks I have studied and recommended, and I bought them myself. So you can buy a stock today, say at 3 naira. Then it goes up, during the bull run, it goes up to 8 naira. And then you want to sell. And then you didn't sell, and then it comes down to 6 naira, comes down to 4 naira, comes down to 3 naira, comes down to 2 naira 50 kobo. You panic. You panic and sell. And then a month after you sold, that stock goes all the way from 3 naira to 25. If it has happened to you, confess. You've sold when you should have actually held it longer. And then only for you to see the stock doing very well. Why? Because the market does not reward your emotions. Your market rewards your discipline. And then the best way to encapsulate your discipline in the stock market is through a system. Have a system. Know your goal. Know why you're investing. It will also keep you from the FOMO, the fear of missing out. And then because I have a system, there are stocks I didn't buy because they were not part of my system. Like if you have been playing in the Nigerian stock market, you must have seen what Ella Lakes did. Went all the way from like 2 naira, 3 naira, 4 naira, all the way to about 13 naira now. Within a very short time, like within months. I didn't buy because it didn't fit my system. But there are people who bought. So you can imagine buying Ella Lakes at 3 naira. Buying 1 million shares of Ella Lakes at 3 naira. That was 3 million. And then only 6 months after, your 3 million is 13 million. 10 million on top of. So people who bought are very happy. And they are talking about it, oh my. So I know people who bought Ella Lakes. They made so much money. The same thing happened with, there's another one, the FTN Cocoa or something like that. People bought at 1 naira 80 kobo. And the thing has soared, perhaps up to 10 naira or more. And I didn't buy, but I saw them. But do you know why I am not bothered? Because I have a system. And I'm true to my system. So I don't suffer the fear of missing out. I don't suffer the greed. I don't suffer like, oh, I wish I had bought. If I had bought. No. It's because I have a system. So the system is regret proof. That's what system does for you, okay? Rule number 2. Understand the business, not just the hype. I can't emphasize this enough. If you look at all the stocks that the wealthiest investor alive has bought and held for a long time, he always looked for an undervalued company. I'm talking about Warren Buffett. He always looked for undervalued companies, like companies that were really doing very well, that had very high upside. potential. And then they will buy them, turn the company around, and they'll make money. So the biggest losses come from buying what you don't understand. So it always makes sense to buy what you understand. Understand the business. It will help you also in strengthening your philosophy of the market, because you also need to create your personal philosophy. I already have a video to this. You can look at it, look for it in the playlist. I have a stock market playlist on my channel. Look at the stock market playlist, and then you'll see a video on how to create your own investment philosophy. For instance, one of my philosophies is that I want to own everything I use. I want to operate by the owner's mindset, not a renter's mindset, not a consumer mindset. What do I mean? That affected what I invest in, because now I use telecommunications every day. I was looking for my phone. So I use telecommunications every day. And then instead of using the money I'm earning, my active capital, my active income, to buy airtime, to buy data all the time, I decided no, I'd rather own the telecommunications company. So now I own the telecommunications company through the stock market. I bought shares. When you buy shares, you are called a shareholder. And then whatever profit that company makes, they share with you through dividends. So now, what has been happening, it was just last year that company didn't pay dividends because they were having some systemic issues, which they have resolved. The dividends that I get from that telecommunication company pays for my voice. It pays for all my airtime for the year. Isn't that smart? So I would have bought that airtime, but I decided, no, invest in the company, become an owner, so that when they pay dividends, it will cover everything I spend on data and voice. That's the wisdom and the financial literacy I'm talking about. The same thing with the banks. I own the banks that I have accounting, because banks do charge. They charge. And then if you should borrow from the bank, they will charge you interest. But there are all these charges that they slam on you on your account. And now, because I'm an owner, it doesn't bother me when they charge me or when they charge another person. When you come crying, oh, look at JD Bank, look at this bank. You know, they just charge money anyhow. They deduct, they wake up and they deduct anyhow. And all that and other. I don't complain with you. You know why? Because it's my business. And anytime they charge you, I make money. But you can do the same thing. So own what you use. If you're eating food, if you're using palm oil, then invest in agricultural sector. If you have insurance, invest in the insurance company that do business with your business. That's the philosophy behind it. So understand the business, not just the hype. Because people will always come every time. You go on YouTube, you go everywhere, and they'll be telling you hot stock. Buy this one now, hot. This is hot. This is the hottest. If you continue to chase hot stocks, you are going to lose money. So avoid that. Always ask, what does this company sell? What is their competitive advantage? What is Warren Buffett would call it the moat? What is it about that company that no matter what happens in that sector, that company will survive? Are their products really like fast-moving products that people buy, that people really love? Because part of the reason I invested in Cutix is that those people produce these cables that are top quality. If you've ever been involved in construction in Nigeria, you will know that Cutix cable is premium price, because they are very good. They are far more expensive than your imported cables, and they are good. And again, I had consulted for that company and taken a tour around the factory. Then I knew that is a company that will be there for a long time. So I do not care how the stock prices are fluctuating, but because I know the company and I understand that business and I know the management. So because those are the things you look for, the management of the company. Who are the people managing it? And if you go to the corporate governance parts or sites of the governance of the stock market. All these disclosures are made there. All these disclosures are made there. And then for some of you in the Financial Fitness Challenge, I encouraged you to open an account. It's free with InfoWare. InfoWare doesn't just give you live market data that you trade with. It also gives you information about each of those companies. It tells you whether there are foreign investors, whether there are institutional investors in that company. It tells you who the directors are. It tells you what the company is into. So always research. Don't just buy because it's a hot stock that people are shouting about in Telegram groups and different places. Okay? So if you can't explain what you own in one sentence, you don't own it. It owns you. Rule number 3. Never play with money you can't afford to lose. Not once or twice. People come to me, boy, I have my house rent. My house rent is due in 3 months, but I have it right now in bulk. And that house rent is 2 million or is 3 million. What stock should I invest it in so that in 3 months' time? Don't try that. Don't try that, because that rent can go, and then some people also put their stock, put their their school fees. They use their school fees to try to trade stocks. You will lose that money. If you can't afford to lose it, don't play with it. Don't play the stock market with money you can't afford to lose. Now, I think there was a time, it was 2 years ago, a popular Nigerian pastor came out and then he was bad-mouthing the stock market. He bought the stocks. He took a loan of 260 million. Was it 260 or 360 million? And then he put it in this and such stocks. And then the whole thing, he didn't. How do you borrow money? Borrowing in Nigeria is like 30%, 25, 30%. How will you borrow money at 30%? Money that is not your own. You borrow it to try to play the stock market. Don't do that. Okay? So this rule is very obvious. So don't put your child's school fee. You're going to pay school fee in September. But you have bulk money. You had that money sitting in your account in August or in July. Say, okay, let me invest it. And then I will sell it. Because it can't predict the market. Nobody predicts the market 100%. So, because sacred investing, remember I'm talking about 5 sacred rules. Sacred investing is long-term. Don't gamble your emergency fund. If losing the money will make you lose sleep, it was never investment capital. It was survival money. Did you hear what I just said? That should be an aha moment for somebody. If losing the money made you lose sleep, that money was not investment money. It was not investment capital. It was survival money. Rule number 4. Time plus consistency is the key, not timing the market. If you start, like every week, you set aside a certain amount of money and say, okay, every week I'm going to invest $10 or its equivalent in your country. And then you map out, remember I talked about a system, because you have a goal, you have a vision, maybe it's retirement. And then you now have a list of stocks. Like I have a list of stocks, I keep buying them, no matter what the price is in the market. And I don't regret, like when I bought, I got GT Bank, some GT Bank at maybe 96, 98. Then it went to 100, it crossed the 100 Naira boundary, and then now came back. I think it's about 93 right now. I don't care. Every time I'm very consistent. So I'm not trying to time it. Oh, let me time when GT Bank will come down to 85 Naira. Then I will buy. No, I don't do that. For the stocks, I have decided that these are the stocks that will follow me. These are the stocks that will form part of my legacy. And then for you to have a stock like that, you have to ask yourself some serious questions. Is this a stock I would like to grow old with? Is this a brand I really like, I would like to associate with? Because you're actually buying the company. You are not just playing the market. Okay, so time plus consistency will beat timing the market. So don't try to buy low and sell high, because it sounds really nice. And then many gurus tell you buy low, sell high, until you realize that even experts fail at it. Having said that, if you're playing with penny stocks, for instance, because I said your strategy is derived from your goal, your investment goal, it doesn't mean that if you are doing the penny stock strategy or growth stocks, it doesn't mean that you should not look at your candles or look at the market, look at the dynamics of the offer and the bid during trading. It can give you some idea about the market entry. So I'm not saying you should just, it depends on your strategy. Like I'm saying, for my dividend stocks, investment stocks, retirement stocks, I don't time the market. I just continue to buy. And then that's what some people call dollar cost averaging, because as you're buying, today you might buy at 30 naira, the next day you buy at 50 naira, the next day you buy at 40 naira. At the end of it, your dollar cost average might be 45, but then the stock has already gone up to 70 something. Then you buy some at the 70 something, buy some at 100, buy some at 150. And then at the end of it, it's 150, but your dollar cost, your average is 90. So you are still in profit. So don't try to time the market. Regular investing, actually it has been shown that regular investing wins 90% of the time over traders trying to time it. Because the traders, who do daily trading, what do they call it? What do they call it in Forex? It's not swing trading. I think something like scraping. So they trade every day. And then one day they may make like 20%, and it looks like, wow, these people are really doing good. Another time they make 80%. Another time they make 50%. But then studies have shown that at the end of the year, that the person who was investing regularly, people who invest regularly win 90% of the time over the people who traded every day. Okay? Yeah, day trading. Thank you very much, Michael. That's what it's called. Day trading. In Forex, I think they call it scraping as well. Day trading. Swing trading is the one you can do for like 1, 2, 3, 6 months or something. Okay, so the market punishes noise chasers but rewards quiet consistency. So don't be a noise chaser in the market, in the stock market. You should be the quietly consistent one. Just quietly investing. Whatever comes in today, put it in the market. Don't put it in savings account, put it in the stock market. And finally, rule number 5, know when to sell and when not to. Most people don't lose money because they bought wrong. They lose because they sold wrong. And then something that many of us don't even know is that anytime you buy, your stockbroker takes a commission. And then when you sell, they also take a commission. And then sometimes you just see a little movement in the stock, and then you sell it too early. And you think you are selling for 8%. You don't know that eventually it's just 5, because they have to take their commissions and some other statutory commissions that you normally see in your contract note, purchase contract note. So let winners grow, cut losers quickly, learn the difference. So when you have a stock that is really winning, leave it. Don't sell it. People are asking me, should I sell UACN? Somebody bought UACN at maybe like 30 or 20 something naira. Today is 50. And should I sell it? But no. Learn to leave the winners to continue to win. And then the losers lose because their fundamentals are no longer good. They are not generating revenue. They are not profitable again. They have serious issues with their management and things like that. So when you see stocks like that, then the stock price is not performing very well in the market, then you can decide to sell and then put it somewhere else. So, and it's called portfolio rebalancing. So people sell, people lose money when they sell wrong, when they sell at the wrong time. There are some of you who sold Zenith Bank at 43 naira, 45 naira. When you heard some small news about Zenith Bank, you panicked and then sold it at 40 something naira. Just early last month or so. This month, Zenith Bank is 70 something naira. Okay, so you lost money because you sold at the wrong time. So fear makes you sell too soon. Greed makes you hold too long. Don't forget that. Wisdom knows when to exit. So the stock market doesn't care about your background. It doesn't care about your accent. It doesn't care about your feelings, but it cares about these rules. So if you follow these rules, you will make money. And these rules will teach you patience, because patience is what is a law of money. Patience is a fundamental of money. You know, we're talking about fundamentals. Patience is a law of money. If you follow these 5 rules I've just given you today, the stock market will reward you. They are sacred rules. They don't change. See, but if you break them, the market will punish you, and it will punish you without apology. So if this was an eye-opener for you, you probably want to join my Financial Fitness Challenge. That's my monthly mentorship group. In this description of this video, if you are already not in the wait list, you will find a link that takes you to the wait list to join the next Financial Fitness Challenge, where we actually put these things in practice. Because it's not the person who continues to hear that creates wealth. It's the person who takes informed action, who takes this information and these insights that I'm sharing and then turns them into money. So go to the description right now. You will see a link to join the Telegram wait list. And then once the next Financial Fitness Challenge is announced, you will get the information first before other people to enroll. All right, so let me read a few of your aha moments before we round up for today. What was your aha moment today? Type it in the comment section, and I will read it, and then also mention your name. And then the good thing about mentioning your name in these videos, you know, that's one of the things I like about YouTube. In another 10 years, this video will still be here. In another 20 years, even after I'm gone, like in another 50, 60 years after I'm gone, these videos will still be here. And then, who knows, one day your children are grown up and then they come by this and they hear your name mentioned. Say, no wonder Daddy was very wealthy. This was the kind of information that he had access to. All right, so tell me what your aha moment is. Okay, Victoria says, fear makes you sell too soon, but greed makes you hold too long. Actually, yeah. A better way to put it is that, yeah, greed makes you hold too long, actually. But the most important thing is the wisdom that tells you when to exit. Very true. John says, I've been trading 5 years. 3 things: screen time, screen time, screen time. Switch your focus to risk and profit. Identify the emotions and feelings you have leading up to you getting emotionally. All right. Thank you, John. That's very important. Okay. Managing your emotions while you trade. Festus says, can't download Telegram. It's in the App Store. It's in the App Store. So maybe you should check your network or something. Anybody, anywhere in the world can download Telegram. Okay. Chike says, please help me with 5 stocks I can invest in. It's difficult to help you with 5 stocks you can invest in. I don't know what your goals are. I don't know what your risk appetite is. I don't know what your investment window is. So it's not possible to just tell you 5 things to. But join the wait list. Okay. Elizabeth says, my aha moment is own what you use. Exactly. Do business with your business. That's the way to become wealthy. Do business with your business. Festus says, the money is in the mind, not in the market. Absolutely. So it's the financial literacy in your mind that gives you access to the money that is in the market. Okay. John says, my aha moment is know what you own. Michael also says, if you cannot explain what you own in simple sentence, you don't own it, it owes you. Hylaranks, oh, sorry, is it Haifa? Pardon me. Is asking, does this strategy apply to Forex? Yes, it does. It does. It does apply to many financial markets. Like the first law, you don't invest in what you don't understand. If you don't understand Forex, you are going to lose all your money in it. And so it's important to invest strongly in your mind, whatever you want to do. People lose all their money in Forex, not because there's no money in Forex. Because every day in the Forex market, over $5 or $6 trillion are traded every day. So there's a lot of money there. But if you have no idea what you're doing, you're going to lose that money. So that's why I said that the money is primarily in the mind, not in the market. All right, ladies and gentlemen, I hope this has been valuable for you. Whatever happens, please keep showing up, because you can build that wealth. You need to see yourself as one of the people too who can build wealth. Because the people who are building wealth, I myself in the journey, I don't have two heads like you. I don't have two heads. You can do it. It's possible for you. So change the way you look at yourself and start seeing yourself as a healthy, wealthy person, and start implementing all the things, all the insights that I teach you every day. So keep showing up, for you never know what's coming your way next. And I'm going to see you exactly same time tomorrow. Love you. You have a good evening.